Is up, you guys? Q here from Hyperstocks. First of all, thank you so much for tuning in. I'm going to make it short and simple. Today we're going to go over the stocks that we'll be watching this week as a community. These are just the preliminary stocks we're watching. They're not set in stone. These setups are not set in stone. Given the fact that the market is so volatile now that we're nearing the election, we have to play our stocks and our positions in a very selective manner. We have to go in with modest price targets, and we also have to keep our stop losses very tight in expectation that the market can downturn at any moment. Before we start going over the watch list for this week, I just want to go over the results of last week's watch list. As you can see here, we had an outstanding trade on the NEO setup with the stock gaining nearly 40%. So that's a very impressive gain. A lot of the members capitalized on it. They brought in over $30,000 in profit. So a fantastic job on trading NEO. You guys crushed it. Followed up by VXRT and then so on and so forth. You can see that two of the stocks on our watch list did not perform at all. One of them did not reach the price target, and the second one, being V, actually ended up hitting our stop loss. So still profitable overall. We still had a pretty good gain on most of our setups. Some of them, as expected, you're not going to be 100% every time, which is why we have stop losses and points. You got to remember, guys, the stock market's about ratios. It's not about being 100% right every time. As long as your P&L is positive overall, then you're doing a good job at whatever you're doing. You just keep doing it and growing your account. It doesn't matter how slow, it doesn't matter how fast. All that matters is that you're positive overall throughout the week, throughout the month, throughout the year. Now moving on into this week's watch list, you can see that some of the stocks are blocked out. They are exclusive to our community. In fact, we usually block out more stocks, but we're going to give you guys a little bit more as a special today. First on our watch list is going to be TBIO, and then GE, MDT, DMYT, and NSC. And I'm going to go over the setups on these guys, why I chose these stocks, what's so special about them, and what we can expect from them in the near future, and how you can trade them for yourself. All that we mention is not investing advice. You guys have to trade at your own risk. You got to remember that at the end of the day, this is just our analysis on these stocks. We recommend that you do your own analysis and you do your own charting before you jump into a trade. So without further ado, you guys, let's go ahead and get started with TBIO. So TBIO, first of all, is going to be a medical company. It actually is involved in COVID. They are producing the antibodies, and they are actually reporting that their antibodies are pretty strong. And so you can see that the stock's chart at one point rallied all the way up to $28 very impressively. This was all during the COVID stock hype, which technically, there is still a very high demand around stocks that have to do with COVID because COVID is very much still around. We're still looking for those companies that are producing good antibodies and are looking to produce vaccine eventually. And so what we've set up here on TBIO in specific, you can see that the stock came off of a double bottom after coming down for such a long period of time. Since then, the stock has reversed and is now looking to break the neckline of that reversal. So as long as the stock is downtrending, we're going to call it in a bearish manner. But you can see that the stock is trying to come back up, and the neckline is right at $16. And so we really need to focus this week on a breakout above the $16 price point. A breakout above that price point can lead the stock up to $16.70 and eventually even $17.50 on a strong enough momentum run. One good thing to keep in mind anytime that you're trading these stocks is to always move up your stop loss when you have the stock running. So as the stock keeps going up, you obviously don't want to leave your stock down there below $15.50. Now that the stock has crossed over 16, you can turn that resistance into a support point and use a stop loss just below it. And you can use a trailing stop loss order or just keep moving up that stop loss as the stock keeps going up. You got to remember things are moving very quickly now that we're nearing the elections once again. So you have to always be able to capture profits, and that's what price targets are for. Price targets are derived from resistance points, and so when you derive a price target from a resistance point, it's obviously a spot in which we expect the stock to perhaps turn around or slow down around. So you always want to get into habits of capturing at least some of your profits at the resistance point. That way you're not losing out when it comes back down. Another thing to add on for TBIO is the daily candles. You can see that the stock, after coming off this double bottom, it has very good accumulation volume. So over and over again, the stock keeps gaining these solid green bars of volume, in which means that there are more buyers getting more interested at these levels. All they need is a little bit of momentum above the $16 breakout for the stock to keep going. Thursday and Friday were very appealing from the stock. You can see it had back-to-back days of buying, and the stock actually went higher on Friday. So we are expecting the stock to test 16 in the near future. As long as it stays above the 1550 support point, the stock is technically still in a healthy position, and it could still very much test 16 this week. The next stock on our watch list is going to be GE. So GE, first of all, we want to focus on the daily candles. You can see that the stock had a massive breakout after this bullish flag. You can see that the stock formed a bullish flag throughout the week last week after wedging down for so long. And then Friday came and the stock had a massive 7% day. So this is a very big day for the stock. And we can expect it to keep going further now that the stock and GE in general is showing signs of progression in their company. Now, a lot of companies that used to be giants, the reason they fall or the reason they deteriorate over time is because they are not adapting with the times. But GE in specific is landing all these contracts, and they are fighting to take back their name and to bring back their name to the spotlight. And now their stock is showing signs of bottoming out right before earnings too. So very important to note out that none of these stocks are meant to be held through earnings. These are just meant to be bought and sold before earnings. Playing earnings is a little bit of a gamble. You don't really, personally, we don't play earnings too much in our community. But if that's something that you do and if it's worked for you, then that's going to be your play. But in our community, we try to avoid earning plays unless they are in long-term positions that we're holding. Now, in terms of the short term for GE, we can see that we've laid out some support and resistance points for you guys. Supports at $7.20 and $7, so entry above these two price points is okay, and you can use one of these points as your stop loss. The first price target we have for GE is going to be $7.90. So after the stock breaks out of 750, it's likely going to consolidate and keep consolidating for quite some time before eventually pushing higher. One thing to note about GE is that it is known to be a slow mover, so you don't want to be in a rush when you're trading the stock. You want to allow it and give it its time while it moves up and down, and then you can eventually capture profits as long as we're doing it before earnings. The next stock on our watch list is going to be MDT. Now, MDT was on our watch list last week, and I'm going to show you guys why. So you can see that the stock also is coming off of this perfect double bottom pattern. Now, double bottoms are typically not confirmed until the stock is able to break above the neckline, in which it did so perfectly when it broke above 108. Our entry last week was meant to be between 109 and 110, but you can see that the stock had a little bit of tough time breaking out or moving up with the market conditions that we were given last week, considering there's so much volatility. But the stock did stay above our entry price target. Therefore, the stock is still following through and looks like everything remains healthy. The stock did make it above the resistance of 110 on Friday, but it failed to hold position near 111. Yet it still closed near the highs. So that's a very good sign that the stock will continue moving on up. We need the stock to break out of the 111 resistance this week and then eventually move to the 114 to 115 price target. One thing to note about MDT in specific is that it's very influenced by the broader market, so you have to keep an eye on the broader market, overall market conditions when you are trading this setup. The next stock on our watch list is going to be called DMYT. Now, DMYT is one we're excited about because it's a fairly young company on the market, and it is also expecting a merger in the very near future. The merger is with a company called Rush Street Interactive, which is an online gaming company that focuses on bringing real money betting to social gaming. So the games that people play on their phones or on Facebook, they are bringing real money gambling or betting into those games, which is a very exciting field. It's a very profitable field. It's proven to be a profitable field in the past when it comes to betting or online betting. We all know how DKNG or DraftKings has done, and that's a sports betting app. Now we are bringing it to a social game that's played nearly every day. It's not dependent on sports or anything like that. So this could be big for this company. In terms of the technicals, the stock is displaying a strong upward move that happened on Friday. So considering that Friday was a strong upward move that got rejected at 1350, we can expect the stock to relax for a day or two before keeping the continuous move up. Stocks typically don't shoot straight up, and you typically don't even want them to shoot straight up because momentum will not be sustained. So considering the stock shot up on Friday, got rejected at 1350, we can expect the company to consolidate or the stock to consolidate between 13 and 1350. As long as the stock stays relatively in this area, we can still call it a healthy setup. And our best entry target for this stock is going to be at a breakout above 1350. So we want to see the stock break above 1350 before entry, then lead it into our next price targets between 14 and 15, which is going to be our all-time high territory for this stock. So very excited to see the stock move up. It's probably going to struggle a little bit breaking out into all-time high territory. So you have to also be patient with this company. It's not just going to happen overnight. The last and final stock on our watch list is going to be NSC. Now, one thing that has proven to stay steady throughout COVID and coronavirus is home building and home real estate. We can see the numbers clearly that home building and real estate is still flying through the roof, and there's a strong demand for building material in general. Now, NSC is not a building material company, but they are involved in transporting building materials, and they are constantly receiving upgrades from analysts with expectations that they will do even better in 2021. This is a giant, and this could be a very good opportunity. Now, the specific setup that we have set up for it is meant to be entered and exited before their upcoming earnings, but we will still keep this company live on our watch list even after earnings for a potential position trade as the stock keeps moving closer to the $250 price target that we've set for it. In terms of the short-term movement that we've got for the stock, we're expecting the stock to, if the markets stay healthy, maintain that $215, $216 support point and eventually move its way up to $225. So our entry point is between $220 and $221. Our stop loss is just below $216, and our price target for it is $225 to collect profits, and hopefully we get that before earning happens. Alrighty guys, well that's going to be it. Thank you so much for checking in. If you guys did like what you see, please give us a thumbs up. If you want to see more of these videos, subscribe to the channel. We'll be posting them every Sunday, a part of our watch list promise. Thank you so much for checking in. Have a great day.